Good evening, dear friends. Myself, Harin Mehta, Vice Chairman, Western Region, NMI. Welcome to my dearest guest speakers from the exchanges BSC and NSE, NCL and ICCL. Today is our Western Region's 131 Knowledge Seminar webinar number on UPI block mechanism. So this is more like an ASBA, but it's still through UPI. As we all know that this will become effective, circular will become effective from 1st January 24. We will eliminate the custodial risk and client collateral, reduce capital requirement for the members, and it will directly beneficial for the small and medium-sized investors as well as the HNIs. Let me throw some more light on this. Before that, I would like to tell and welcome the exchanges and the speaker CCs to take up the presentation and enlighten us with the seminar on the seminar. Thank you.
So should we start the presentation?
Yes, please.
Okay. Okay, good evening, everybody. I'm happy to be presenting these slides on trading supported by blocked amount through UPI. This is a SEBI circular that was issued in June 2023, which was on the back of public consultation that SEBI issued in January 2023. And this is going to be an optional facility that brokers can optionally offer to their clients, and clients also have the choice of whether to use it or whether to trade in the regular manner. And if they can choose either of the two. So if any client chooses to be on this particular model, then the client must provide funds through the UPI block route only, cannot transfer the funds to the broker. So this mechanism will ensure that the funds remain locked in favor of in the customer's account, which are lien marked in favor of CC. And as I mentioned, this is a optional facility, and to begin with, it will be only in the cash market segment. So I think before you all must have seen the circular, but so I'll focus mainly on how the process is going to work in depth. So there are many entities involved in creation of a UPI block. So of course, UPI will be the central system that will orchestrate this whole block creation. Then there will be the client and the client's bank, CC's sponsor banks, CC, and the TM and CM. So there are, what the client will do to create a block is he will go to the broker's app, broker's mobile trading app, and then there can be three models in which the broker app can connect with the UPI app. So one is through an intent call, so which means that the broker's app can invoke a URL in the standardized format given by NPCI, and the broker's mobile app will call the UPI app. So let's say GPay or PhonePe. So as we do in e-commerce, we could enter the relevant fields like TM code, UCC, etc., which will be captured by the broker's app, and the broker's app can call the UPI app on the customer's phone, which can be GPay, PhonePe, or any other UPI app. Other possibility is to do the scan and pay. So broker's app can create the URL which is essentially in the format that NPCI specifies, and if the customers scan this QR code, then the block can be created through any of the UPI app that's supporting this. The third model is the SDK, which is an in-app experience where the broker's app itself develops capability to integrate with UPI, and the broker's app itself generates. So without depending on GPay or PhonePe, broker's app itself can do this whole orchestration. So how then it will work is that CC will have virtual payment addresses provided. So let's say we have HDFC, ICICI, Axis as sponsor banks, then we will have NCL or ICCL, whichever is the CC, they will have their own VPAs with each of the sponsor banks. The broker can decide to which sponsor bank the broker wants to send. So suppose NCL at HDFC, NCL at ICICI, these are the VPAs. The customer can, through the broker's app, invoke the UPI app, to which will create the block in favor of the one of the VPAs specified by the CC. When the message is received by UPI will do a verification with customer bank. Customer will enter the UPI pin, and upon this authentication, the block will be successfully created. So when the block is created successfully, UPI will send this information to the relevant sponsor bank of the CC, from which who will route it onward to the CC. So CC will understand that for this particular TM and for this particular client, this is the block created. After the CC receives this information, we have published the API structures in which the CC is going to intimate the TM and CM. So TM and CM will get this information, and based on this successful creation of block, they can give the limit to the client in their front office RMSs. So once the block is successfully created, one could give limit to the client, and the client will be able to trade. So the experience for customer will be more or less similar, but of course the banks as well as UPI apps will need to develop these new kinds of messages. There are a couple of changes from the ASBA. So for IPO ASBA, this facility is already available when one can create a mandate in favor of the exchange. But there what happens is two things. One is it is a single debit mandate. So if there is no allotment is there, so whatever is above an hour, more than allotment is refunded automatically. It does not continue to be blocked. In this case, what will happen is this will be a single mandate with multiple debits. So if I create a block of 5 lakh rupees and day 1 I trade 50,000, day 2 I trade 50,000, it can continue. That 5 lakh I can potentially, if I do a 1 lakh trade, then 1 lakh is debited, but 4 lakh will remain. So next day I do another 75,000 ka purchase, then 75,000 more will get debited. So the block will not get released, unlike IPO. And other than that, no, because in IPO there is a they don't have this intent, but they have a request to pay feature. So that will not be there in this trading supported by blocked amount. So some fields like trading member code, etc., will have to be captured. Segment also. So when we move to multiple segments, then initial segment where it has to be put will have to be specified. Of course, after it works like allocation, it can be moved to any other segment. But these additional fields have to be captured in the message, and it is a single creation with multiple debits. So apart from these two changes, it works mostly similar to the IPO in the primary market ASBA. So like I mentioned, CCs we will appoint multiple sponsor bank and give the VPAs to the market in favor of us. So using those VPAs, one could create blocks. We will develop real-time interfaces to receive data from the sponsor banks, as well as to provide data to the members. And members will have to, of course, build these interfaces. Those who want to provide this facility, build these interfaces to capture this real-time information from CCs on the API and integrate it with their trading front office. So this is just to give an experience of customer, how the customer will trade. So let us take a buy example. Suppose a client has created a block of rupees 150. Once the block is successfully created, today brokers have to do allocation client-wide. So collateral allocation process will not be applicable for these clients. So if a client has chosen to go on the UPI mode, there will be no allocation possible. It will be only through UPI blocks. So out of the BGFD or other collateral, one cannot allocate it to this client. It will be the cash collateral will be only through the UPI block. So suppose this client has created a block of 150 rupees, which gets allocated to the client as if it's allocated to as collateral, and he has bought a stock of 100 rupees. So this block works for both towards collateral and margin requirements as well as towards settlement. So today the margin and collateral is separate. So suppose you have given margin requirements, still settlement is separate, then you'll have to put a going forward also, when we have that facility, you'll have to put a release request to use the collateral towards settlement. But in this case, everything will be done automated. So this block works towards margins as well as works towards settlement without the broker having to do anything. So first, so with 100, suppose the margin requirement is 20, which can get adjusted towards the block. STT and stamp duty we will calculate. So suppose for this 100 rupees worth stock, it's 11 paisa. Brokerage, we will give a facility for specifying brokerage, and suppose in this case brokerage is not specified. So the trade value of 100 rupees obligation plus STT stamp duty plus brokerage, if any, we will debit at the end of the day towards the settlement obligations of this client. And remaining, so 150 minus 100.11, so 49 rupees and some paisa, that block will continue to remain. And in case of these clients, the settlement which is payout also will go to the customers directly. So in this case, the whatever securities have been purchased by the client, we will give it to the client's demat account directly. So depositories are building a system where there will be a hop skip entry in the CM and TM's pool account, but the securities will go to the client account directly. And in case of sale, if the client sells securities, then today there are two mechanisms. One can do an early pay-in in depository through the block mechanism or use the regular pay-in. So for these clients who are on UPI, early pay-in will be mandatory. They can only provide early pay-in by the they can only deliver securities through early pay-in by a given cutoff time. And of course, if the early pay-in is done before the trade, margin will never be applicable. If the early pay-in is done after the trade, then between the time of trade till early pay-in completion, there will be margin applicable. And here what we'll do is, again, from the payout of due that is due to the client, will subtract the amount of STT and stamp duty and the specified brokerage. STT stamp duty will go to the government, brokerage will go to the broker, and the net amount after deducting all this will go to the customer's account directly. So the payout again of funds also will not go to the broker's account, but will go to the customer's account directly. So just to summarize the SEBI, so this was an overview. To summarize SEBI circular, client can create their bank account using UPI. Block will be in favor of the clearing corporation. Only the clearing corporation can debit the block. The broker will not be able to debit the block. This amount will be considered towards collateral as well as settlement. As what UPI has permitted is, they have permitted a block for per block limit of 5 lakh rupees, and as per NPCI rules, up to 3 blocks can be created within a 24-hour window from one bank account. So every day up to 15 lakhs can be created from one bank account. But it is possible to have multiple bank accounts in the UCC database, and with those multiple bank accounts, additional blocks can also be created. The amount that is debited will be used by CC towards pay-in, and which will include STT stamp duty and any brokerage also. But suppose there is any shortfall, so suppose there is the broker allows the client to trade even without the block having been created, because we are not doing a pre-trade order level checking. Suppose only 100 rupees block is created, but broker allows a much bigger trade by the client. In that case, whatever is the residual amount over and above the block, that will devolve on the broker, and the broker will have to settle that amount. And in case of any unutilized block, that suppose customer has created a block but no longer wishes to trade, or if there's any residual block against which the customer does not want to trade, the client can, through the member, request for release of the block. And when we receive this request, we will do the necessary validations and release the block. Like I said, this is an optional facility, so it is a choice of the broker whether to offer this or not offer it. Brokers can offer, or they might decide that they don't want to offer. the guidelines that is issued also allow brokers to you give it as on a pilot basis to limited number of clients. So let's say that one wants to give this facility but does not want to on the day one to give everybody. On pilot basis, it can be offered to a limited number of clients also. And then again, even if it is offered to clients, it is the client's choice whether they want to avail this facility, or they want to trade in the regular mode. If they are comfortable in the regular mode, they can trade in the regular mode. And there are so these facility can only be available to resident individuals and HUFs. So corporate clients, we cannot use this facility. Institutional clients, custodian clients cannot use this facility. NRIs can also not use this facility. So it will be only resident individuals and HUFs who are trading through a TM UCC model, not through a custodian model also. So the exchanges will provide a facility for registering these clients on the UPI framework in the UCC database. So when a broker goes and decides that such and such clients want to get registered on the for this facility, then the exchange will validate the bank and demat accounts that are given by the does anybody have any question? I heard something.
Aniket, we have given a slide on this process flow of exchange, and we can also display that.
Okay, so then what I'll do is I'll skip this part, and maybe you can show your slide on the exchange. This one, or do you want to take it now? I'll pause and you can take it now.
Yeah, because this is a very small slide, as yesterday we have displayed.
Okay, sure. So please, I'll stop sharing. Okay, I'll stop sharing. You please share and discuss that part of registry.
Sheetal, please share the slide.
I don't have the slide. Huh? Sorry.
No, yeah, I do have. I'm sharing it, sir. I'm sharing it here. So can you see this slide on the screen?
No, Sheetal, not yet.
One second, I try again.
Oh, that's it.
Yeah, now we can see. Yeah, good evening, everyone. I myself is Jyoti Thukral from BSc. So what I would like to give you a brief view, how would be the process flow of the UCC at the exchange end. The first step would be the client who are desirous to have to avail this facility of UPI will request to the broker. Broker in turn will go to the exchange UCC portal and register this client with the option of having the UPI facility. Exchanges have already issued one notice on 18th October regarding the UPI, wherein the modalities and new fields regarding the UPI has already been provided. Once the broker will register the UCC of that client with the UPI details, wherein the broker has to select, okay, this client is ready to avail the UPI facility. He has to give the bank and demat account details, with mandatory as one should be the primary bank and demat account details. After the successful registration in the UCC system by the broker, the exchange will send the demat records of these clients to the depositories for the validation, and the bank details entered by the member to the sponsor bank. On the successful validation by the depositories and banks, the data will again flow back to the clearing corporation for their approval. Similarly, if the client want to deregister the client, that facility is also available in the UCC system, where the client broker will mark the client as deregistered, and the request will again go to the CC for their approval. And this is a brief view on how the process will flow. Detailed fields is already given by the exchange in the notice on 18th October, number 39.
Here I would like to add one more thing. This process is common across both the exchange. My friends from NSC from the same section may not be there. So that is why I'm taking liberty that this is the same process at NSC also. Aniket, now we can take up a question of
yeah, so suppose there are some couple of points on
you can carry on.
settlement that I want to cover, so I'll just cover the settlement portion.
Thank you.
Okay. So yeah, so like this part is covered by BSc. Thank you. And then what happens is for trading and risk management, there will be no change. Basically, the allocation that is done today by the broker will be replaced by the UPI block that is done. And when in case of settlements, there will be a change. So for UPI clients, after the close of market, we will download obligations the way we do today. Then for the UPI clients, the pay-in cutoff will be 8 p.m. So if suppose if it's a pre-funded trade and the customer has done the block for the entire amount, that is perfectly okay. The block will exist already. But suppose the client has traded on margin basis, so like some 20% you have allowed the client to the trade basis 20% margin collection in the form of a block, then the remaining 80% block has to be created by 8 p.m. So the client should ensure that by 8 p.m. the whole whatever is the obligation to that extent block is created. And in case of securities sold, the early pay-in in depository also has to be completed by 8 p.m. So 8 p.m. will be the cutoff for UPI clients, funds as well as securities. We will debit the block at 8 p.m. and securities we will not debit, but if there is the securities are not given by 8 p.m. we will consider them as short. Thereafter, if there is any shortage where client has not fulfilled the obligation will devolve on the broker who will have to settle. And this settlement timing for the non-UPI clients obligation or proprietary obligation and these such devolved obligations, if any, all of that will be 11 a.m. on the T+1, the way it is the current practice. So pay in payout of non-UPI clients as well as prop will happen as per existing mechanism. For UPI clients, while their pay in cutoffs are on T day, the payout to the UPI clients will only complete along with the regular payout on T+1. So this is the broad process. So yeah, so that's the end of the slides from our side also.
Shall we take Q&A now?
Yes, please, Sita.
Okay. First question is, as the circular mentions that it is optional for client to opt for ASBA for secondary market, and in such case, if client does ASBA for trading, then allocation of collateral is still required or any new regulatory changes? Please guide.
Sorry, can I take this question?
Yes, ma'am.
Yeah, this is Mrinal from ICCL. So, ASBA or UPI opted clients, they won't be able to, member won't be able to do any collateral allocation for this UCCs. They can only place collateral in the form of a UPI block or in the form of a margin pledge repledge. So the collateral allocation part does not exist for ASBA clients.
Okay.
Can I answer the question? Is it satisfactory?
Yeah.
Next question is, does this effectively lead to client level settlement of buy and sell trade, and broker will get the brokerage from the CC?
Yes, very much like that. So what will happen is on T day itself, 8 o'clock, as Aniket rightly said, at the on T day, 8 o'clock, I will debit the block and clear the obligation, complete the funds paying obligation. As well as by 8 o'clock, I will also pull the early paying of securities created in the form of a block mechanism. If any of the obligations is not fulfilled, then the obligation, the part of the obligation or the full obligation, whatever the case may be, it will devolve onto the respective clearing member. That I will recover it from the clearing member on the T+1 day. Apart from this, if at all it is, this is if it is short delivered, okay. If it is a full pay, a full early paying done by the end client UCC, then the payout of funds and securities will directly go to the UCC's linked demat account in UCC portal. The one which is marked as a primary demat account and the primary bank account in UCC portal. That account will get the funds payout and funds securities payout respectively.
Okay. Next question is it applicable for proprietary trading firm not having any client dealings?
So like we mentioned, this facility.
Sir, this facility at this moment. Yeah, Aniket, go on. No problem.
It is available only to individual and HUF clients. So proprietary, assuming that this is a corporate entity, it will not be available.
Yeah.
It is not applicable, right, for proprietary this thing?
No, it is not available, Sheetal. It is
available.
So it is not, even if a company or a broker they themselves want to do it for themselves, it is not there for the corporate clients. And the partnership firm also will not be available. All those individual brokers can be made available to them.
Okay. Next question is, what is the default block release if not requested? I repeat the question.
The default release is.
Yeah, ma'am. Please go ahead.
Yeah, default release will be, as if you go through the process, we have explicitly thought through about it, and it will be on the settlement, quarterly settlement day, we will release the block.
Okay. Next question is from broker's end. Therefore, once client is registered under this mechanism, they have to do nothing. Are reporting requirements reduced?
To be honest, we are. Yeah, so with regard to the regulatory requirement, the reporting and other stuffs, well, we have already considered this point that we have to deliberate and give clear guidelines to the market that how exactly it will happen. But to be honest, we have not yet finalized on the operating guidelines as far as reporting per se. So for that also there will be a clarity and a separate guidelines will be issued.
Okay. Next question is, through which bank clients will be able to use this facility. So basically, members wants to know the bank's names,
Okay, so there are just to give you a brief idea. I mean, of course, Aniket tried to explain almost everything, but so block creation, every block created, every UPI block created will be a kind of a collateral. So all the banks from whom you can deposit a collateral in the form of a FDBG are the banks eligible to use to create a UPI block. That is what the fundamental logic that market has to follow. So you have to go to every CC's what is a approved collateral or clearing banks, refer that, and from all those banks you can create a UPI block in favor of a respective CC's. While you create a block from those banks where you have account with, say for example, we take example of DCB Bank, Development Credit Bank. It is an approved bank to issue a collateral. You create a UPI block from those banks. While you create a block in a favor of a CC, so CC has some 5 standardized to start with. To start with, we have selected 5 sponsor banks. So respective sponsor bank wise, there will be a VPA address, virtual payment address of each CC will be published, which will be available in the market to the market participants. Because when they create a UPI block, they have to select that VPA address. So once they select a VPA address, virtual payment address of a CC, linked to a respective bank account, once they select it, the message will go from end client's account where he is creating a block. It will reach to the sponsor bank of a CC. So that is how the process is going to be. I hope it is clear. If you want, I can explain it.
So I just wanted to add one point. So in addition to, there are banks that we have exposure against, BGFT issuing banks. They also have to implement the changes required for this single mandate multiple debit facility, additional fields that are there. So NPCI is working with the banks typically who are in IPO ASBA to kind of develop this new message structure also. So it's not even if we say that we allow from our BGFD issuing banks, the banks also have to develop these new kind of facility on their UPI product. So that again, NPCI is working with banks, and as and when that happens, those banks can get included.
Okay. Yeah. Correct.
Next question is implementation date. Reason behind implementation of ASBA, impacted entities, any prerequisites?
When circular goes live on 1st Jan, so that is the implementation date. That is what is the entire MI communities are hoping to go live with it. All the MIs are working on this project. So everybody is hoping that it goes live, it has a smooth landing. What is the aim? I mean, it's just the end investor, the UCC, the retail investor is been given a power that he holds the funds and securities in his own account. That is the power given to them. That's the whole idea. I hope these were the 2 questions, or any other questions.
Sorry, Samrunal, I would just like to add one point. So I think this is not a mandatory circular. So if somebody was asking, I think the question meant what is the impact. So if a broker decides to not offer this facility, there will be no impact at all. But but clients may see value in this mechanism where clients' money is protected, remains in the block. So ASBA is so popular. So similarly, secondary market ASBA will also be popular going forward. But if customers may demand for it, but having said that, there is the choice for the broker. If the broker says that I don't want to implement this, it is the option to the broker. If the broker does not implement it, there is no impact on the daily. However, brokers are operating today, they will continue to operate. But CCs will go live on 1st of January. CCs will offer this product from 1st January, and whichever brokers are ready, they will also they can offer, and their customers can trade this way.
Yeah, correct.
Okay, so The next question is, what will be the impact on regulatory daily, weekly reporting after ASBA is implemented? Will the format and timings will change?
So I think the same question in a little different form is coming back. Well, with regard to the reporting per se for the ASBA clients and the UPI block, how it should be, considered in the collateral segregation, weekly collateral reporting, or any other reporting for that matter, we are yet to deliberate. I mean, we know that these are the important areas. We have just completed on the operating guidelines, and that's why the operating guidelines are issued to the market. We will be deliberating on the reportings as well, and there will be a clear guidance on the same will be issued.
Okay. Next question is, would the UPI funds blocked by client made valid till 31st 12/2030 continue day to day?
So once the block is created, say for today you create a block, from today till next 30 years that block will be valid.
Okay.
As per the even if I say so, for example, if the client has not traded for last 3 months, then we will release that block on the quarterly settlement day. But say for example, client creates or UCC creates a block and he's using day by day. Say for example, hypothetical example, he creates a block of 5 lakh rupees and he is trading for every day 100 rupees, one quantity every day. Okay. He can continue doing it for 30 years. Nobody stops it.
Next question is, you mentioned brokerage and other charges will be released to broker. What is the basis of it?
So member wise, we will collect the brokerage percentage. If you go through the circular, the members have to offer a standard percentage or standard brokerage charges for all their ASBA clients. There will be a process that will be given to the members to give the details of the brokerage percentage, on the basis of which CCs will calculate a brokerage amount for each ASBA trade. And same will be shared to the that will be distributed to the collected from the block and given to the member.
Okay. Next question is, if one client register with multiple broker, UPI blocked amount in ABC broker can be used to another broker?
No. Well, we will be, I mean, with few members, we have shared already the API that will be that needs to be activated. If you go by that, it will be a linkage of TM, CM, UCC linkage will be established, and therefore one block created with using one member cannot be. I mean, you cannot transfer it, just like that. And it is a TM UCC linkage. So with another member, it will be a different UCC altogether.
Okay.
Yeah.
Next question is,
sorry, Sheetal, just a second. Just to my understanding, is it possible that there's only one member to one client will be UPI allowed, UPI block? Or is it that UPI block we allowed for a single client with the multiple brokers?
If a client is trading through multiple brokers, the client will have to create block for suppose like I am a client, I am trading through TM1 and TM2. I can create a block with for TM1's trades, and I can create a block for my trades through TM2 separately. But a single block will not work for trades done by both TMs.
Fair enough.
Additionally, they have to register themselves with both the member if they want to go for UPI.
Okay, noted.
Yes.
Okay. Next question is, what happens if the bank-wise exposure get breached? Do broker need to tie up with all sponsor banks?
Well, the bank-wise exposure still stands valid. CCs will be monitoring bank-wise exposure. For example, hypothetical example, XYZ bank, the bank's, the collateral and the cash balances, whatever it is all put together has breached the limit, bank-wise exposure limit, and additional block of 1 lakh rupees received from that bank. So CC will be blocking that. CC won't be giving the benefit, or maybe we will be releasing back that block for sure. That is one part of the story. Second part of the story where you say that a broker need to tie up with all the banks. I'm not sure to understand. A broker, while creating a block, it will be a end client. He has to create a block, so he will be using only the trading app or a mobile app of a broker, but he'll be using his bank account where UPI services are available. So that way broker linkage doesn't come into the picture. Am I right to say that? Is it
Yes,
good
yes,
enough?
yes. So correct. So what we do is we will monitor the exposure against the customer's bank, and the broker does not have to. So here, if you see if you recall the picture, broker is only the owner of the app. The account is of the customer, and the sponsor bank account is of the CC. So sponsor bank account exposure is different, and the customer bank account is what is the BGFD limit will be monitored against the bank account of the customer. The broker doesn't have to tie up with sponsor bank. The CC will tie up with the sponsor banks for receiving the mandates.
Correct. Is it good enough answer? Has the query resolved? I mean, have you understood it?
Yes, ma'am. Yes.
Okay.
Next question is, securities are blocked by client for specific settlement, but would fund block in this would continue across settlements?
No, I did not get the question. Can you just come again?
Securities are blocked by client for specific settlement, but would funds blocked in this would continue across settlements?
Yeah,
Yes.
of course.
Of course, right? Yeah.
Yeah, of course.
Okay.
So Sheetal, this is client's money, and then he's just keeping it in a UPI way. That's all.
That's all. Okay.
He uses it for as per his discretion, for his margin, for his settlement. Okay, we are just keeping it in a separate pocket. Okay. That's the facility that it remains with his account. Whenever there is actual usage, we will debit it from his account. That's the flexibility.
Okay. After opting for the facility, by what time the obligation be settled through block mode by CC?
So in the slide, I think Aniket explains for UPI opted clients, the paying option what they have got is they can do only early paying. So early paying will be on T-day at 8 o'clock. I will pull it. Early paying of funds and securities both. Payout will be in the normal course, which is on T+1 at 10:30 onwards. The payout process will start.
Okay. Next question is, will broker be able to use this block like nudge? Can a broker raise a request on behalf of client as per authorized by client?
No, not at all.
Okay.
It will be end client, a person on the street will use his bank account, his UPI offered by his bank, and he will create a block in favor of a CC.
And also
he'll be only
to add that this is not like a nudge mandate. So these mandates are those where the customer's money is not blocked but just debited. But this is not that kind of mandate. This is a mandate where the customer's actual money in the account gets blocked by the bank. It is not a debit mandate which can be used, and if funds are not there, it will fail. This is not like mutual fund SIP. Here the fund has to be actually blocked against the obligation, against the creation.
So money will reside into that end client's account. He can see it in his statement. He will only see that it is blocked against particular CC. The lien is in the name of a CC.
Okay.
Maybe to add, Sheetal, and see, I think one of the questions sometime back was, what is the intention of giving this, rolling out this particular
Right.
product? And I think the answer what Brunal and Aniket gave is that, see, basically, we as a market participants, we have seen, we have observed certain instances unfavorable, which were like where the one client money is being used for other across brokers or whatever. And that comfort, that security, that risk awareness has to be given. And this is the main intent of this whole setup. Again, as both Aniket and Mrinal has said, it's optional. You are free to give or not to give. Okay. But from a CC or MIA perspective, we are ready. We are providing this architecture. You use it for the clients which really want to. Otherwise, our old existing way remains.
Okay. Next question is, if client utilized maximum block limit and has shortage, then how settlement would be done, as he won't be able to put additional block limit? Does broker had to take care for the same?
Yeah, I think just before some time, I mean, there's a question. Say, for example, a block is created of 50 rupees and there's an obligation of 75 rupees. And he somehow, because of some technical glitch or whatever, he could not create additional block for 25 rupees. Now, in that case, by 8 o'clock on T day, CCs will debit 50 rupees block amount. The remaining 25 rupees block will be, that obligation will devolve onto the member, and that he has to replenish on T+1 when he does his paying.
Okay. Next question is, in case the exposure of CC to bank exceeds the limit set by the CC shall not accept any additional UPI block from the next day onwards. In this case, client is at a disadvantage. I'll repeat the question.
Yeah, I missed the question. Sorry.
In case the exposure of CC to a bank exceeds the limit set by the CC shall not accept any additional UPI block from the next day onwards. In this case, client is at disadvantage.
Oh, well, it is not a disadvantage. Even if, next day morning, if there's a breach, I mean, the exposure limit is crossed, next day onwards, I will not even take the cash deposit or FD or BG, or for that matter, UPI block. I'm going to treat UPI block as a cash equivalent collateral. So, I mean, the question itself is like it is applicable to all type of collateral for that matter. And yes, I will not accept it.
Okay. The next question is, can you consider procedure where TM sends funds e-block request to client bank account and then client approves or rejects using M-PIN? This offers client convenience of pre-filled funds block request.
Well, the current mechanism, the way we have thought of, or the way it has been designed using NPCI and the things that they have done it to implement this into secondary market, I don't think so. This model is envisaged. So far, so at least this is not considered. Maybe in future, if maybe NPCI gives this facility also, I don't know. I mean, then we have to look at the risk averse measures and all. How comfortable we would be on CCs and the SEBI, of course. So everything, this all what we're talking about, it is in a close consideration of SEBI is received for every step. So for this, if something new, something like this has to be done, we have to have SEBI's blessings on this as well. So so first at this moment, though, it is not available for sure.
Okay. The next question is, what is the use of 05 code in short allocation? Does it mean that the broker can give limits without CC confirmation?
See, so the idea is that broker should give the limit after CC confirmation, but because like CC systems, CC has multiple systems, and while confirmation may have been given, but risk management RMS is not updated. So if something like that, if there is any delay in updating the RMS and within that snapshot is taken, because these are all asynchronously these things are happening. So in such a case, one can use this. This is very unlikely that it will happen, because but still we have tried to cover for that possibility that we send because we have one manner of sending. Once we have received the block, we do two things. We send out a response to the broker and we update our collateral, and these two are happening parallelly. So if at all in a remote case, what happens is that this response to the broker goes first, the client trades also instantly, and this response updating of the limit is happening with a slight delay. In such a edge case only, this will be applicable.
Next question is how ICCL virtual VPA will be provided. Is it going to be broker-wise or one for the market?
Well, yes, it will be both the CCs will be giving virtual payment addresses in the public for sure. Virtual payment address will be as per each sponsor bank. For my each sponsor bank I'll be having my one bank account which will be linked to this virtual payment addresses. It will not be broker wise. It will be for a CC for each bank. There will be one virtual payment address. Have I answered correctly? I mean, are you good? Do you want something else?
No, we got the answer. See, I have after reading the circular, I have personally have 2 to 3 questions.
Yes,
First
sir.
of all, in at various places it mentions if there is shortage at the client's end, the amount of the shortage will be deducted from the member's capital. Okay, with CC. So in such cases, what will happen in the case of reporting? If the member misses such reporting of that shortage because of unawareness or just because of he's unaware that he has got that shortage from the UCC based UPI based client, so will we be penalized for the same?
So you're talking about pain shortages, for example, if at
Pain
all
of
we have to take an example,
correct,
pain of funds, for example, we
correct,
take the pain of funds.
correct.
So block created for 50 rupees, 25 rupees short. What I'm going to do is I'm going to devolve obligation on the member. You'll be downloaded with the reports, okay, which will tell you that what is your as a prop obligation, what will be your end client, non-ASBA, non-UPI based client obligation, and UPI based clients obligation. So that is the bifurcation that I'm going to give it to you. That is, I think that will be self-explanatory, that once you see the obligation, you will come to know that, okay, there is this obligation you need to fulfill next day.
Okay, so that in that case is scenario that back office will have to process that shortage obligations and then report it accordingly.
Yeah.
Okay, fine. So here another question is that bank brokers who are having ASBA or some brokers who are having niche mandate, will that be able to continue? Because this is optional,
No, sir.
right?
Yes, of course. So, Natch mandate, the existing ASBA for IPO, these two things
No, not
are
I'm talking
completely
about the
different.
ISB. I've been talking about the 3 bank-based brokers or some brokers who have a niche mandate from their clients.
Okay. Yeah, that still continues. So nobody's stopping you from doing your current type of a business. Current frame of business still works. It's absolutely
It's
fine.
fine. Perfect.
Yeah.
Okay, thank you for that. Over to you, Sheetal.
Yeah, so I think we are done with the questions. So I request, speakers if they want to give any closing remarks related to the subject UPI block.
Nothing much. We are thankful to
Nothing.
ANMI for conducting this session.
So we just wanted to let members also know that we have issued the API interface for this already, and in November we will start offering the UAT environment for people who want to test, and we hope that members will participate in large numbers and make this project a success. Thank you.
Yeah. So here I would like to also say one thing. While we were designing the SOP, standard operating guidelines for this entire mechanism, all the CCs were all the CCs, all the MIs were working very closely, and then we have decided to issue it. For apart from that, SEBI has directed all the CCs and all MIs that you have to have a standard APIs. So the API which is issued by NCL, that same API ICCL has also designed it. Well, I have not issued yet into the market. ICCL will be also issuing into the market. So that will come, and yes, we need the whole market support. This is such a beautiful product. I mean, so much effort has gone in. Trust me, it's been, I think, 3-4 months that all MIs are working so hardly on this. We really want a good participation from the market. If you need any assistance on this, we can have all the more calls, and we can get into a one-to-one discussions. We are on for that. Thank you. Thank you very much for all your support and kind consideration. Thank you.
So I would like to give vote of thanks now. So I express on behalf of ANMI, I express my sincere gratitude to all the guest speakers for their participation in today's webinar. The presentations were indeed very informative and engaging. I hope our members' maximum queries were solved today related to the subject. And I also request members, if they have any query related to this, can email it to me. We will forward it to the CCs and get your queries answered. I would also like to thank Harin Mehta sir for his opening remarks, and thanking member for their participation in today's webinar. Thank you so much, everyone.
Thank you, Sheetal. Thank you, Exchanges. Thank you, CC.